Welcome back to Investing Talk Podcast. We're focusing today on a specific company that many of you have asked about, Asana. They've got their Q2 earnings report coming up, and there's been some, let's say, interesting reactions to their past performance, even when they beat expectations. So if you're tracking the workspace management sector, or you're just trying to figure out what makes a stock move or not move after earnings, this one's for
Yes.
you. We're going to unpack the analyst numbers, look at Asana's history, check the pulse of the sauce market, and figure out what signals you really need to watch for. And just before we jump in, if you find this kind of analysis useful, please do think about subscribing, liking, maybe dropping a comment. It really helps us do more of these. Also, if there's another company you want us to look into like this, let us know in the comments. Seriously, we love hearing from you. Maybe even, buy us a coffee if you feel like it. It helped keep the lights on. Okay, let's get into it. Asana reports Q2 2025 earnings after the close on September 3rd. What are the official numbers analysts are putting out there? And is there any chatter on the street we should know about?
Yeah, it's quite interesting, actually. The alignment between the consensus and the company's own guidance is pretty tight this time. Analysts are looking for revenue around $187.6 million.
Hmm?
And for earnings per share, the EPS, that consensus, is sitting at 0.05 cents. Now, that lines up really closely with Asana's own guidance they gave previously. They projected Q2 revenue between $186 and $188 million, and their non-GAAP EPS guidance was between 0.04 and 0.04 cents. So very much in the same ballpark. It really suggests management is guiding towards, hitting that near-term profitability mark and focusing hard on improving operating margins. Almost like they're trying to manage expectations very carefully.
Right, managing expectations. So does that leave room for one of those whisper numbers? Is there any unofficial feeling out there, maybe something you're hearing, that suggests the actual result might be different, something you, our listener, should maybe factor in?
That's a good question. It touches on that market sentiment piece, which can be so influential. Look, there isn't a really formal, widely reported whisper number for Asana right now, not in the traditional sense. But if you look at, say, options activity or just listen to the buzz in some retail investor forums, the general feeling seems slightly more optimistic. People seem to be maybe leaning towards an EPS closer to $0.06, perhaps even $0.07. So just modestly above that official consensus. It's not a huge gap, but it does indicate this sort of quiet optimism, a feeling that Asana might just edge out the official numbers with a small positive surprise.
Okay, quiet optimism. Interesting. Despite that tight guidance from management. But, we always say past performance isn't a guarantee. So how has Asana done historically? Have they typically beaten these estimates? And crucially, how has the stock actually responded when they have?
Well, looking back, Asana actually has a pretty consistent track record of beating EPS estimates. Over the last 4 quarters, it's quite clear. Take Q1 2025, for instance. They reported $0.02. That's a significant beat, right? More than double. And if you go back to Q4 2024, they reported $0.02 against an estimate of -5 cents. So again, a solid beat, and importantly, a move into the black on that non-GAAP basis. That pattern holds for Q3 and Q2 of 2024 too. Consistent outperformance against estimates. It shows they can execute, or perhaps they guide conservatively.
Okay, that sounds like exactly what investors want to see,
Really?
right? A company that consistently delivers better than expected. But here's the fascinating part, and I think this is what our listener was getting at. How did the market react? Did the stock jump and stay up after these beats?
Oh, boy.
Or was it?
Well, less exciting. Yeah, and this is where the story gets a bit more complex, and it's really key for understanding this stock's behavior around earnings. Despite those consistent EPS beats, the price reaction has generally been modest and often pretty short-lived. Like in Q1 2025, you saw a small gap up initially, but those gains, they mostly faded by the end of the next day. Q4 2024, the move was even smaller, maybe 1% up, and that reversed within just 2 days. Q3 2024 had a quick spike, sure, but it pulled back within a week. And Q2 2024 was just kind of mild volatility, settling near where it started. So it tells you that while the company hits its numbers or beats them, there hasn't been this strong, sustained buying pressure right after the reports. The market seems to digest the news and then move on.
So it beats, maybe pops a little and fizzles. Why do you think that is? Especially now when everyone's so focused on profitability, you'd think a beat towards positive EPS would get more traction. What's missing?
That is the million-dollar question, isn't it? It probably comes down to the balance the market wants to see. Yes, Asana is improving margins, moving towards profit. That's good. But maybe the market feels that progress isn't quite fast enough. Or maybe it's coming at the expense of truly explosive top-line growth. Right now for SaaS, investors seem to want both strong, sustainable growth and clear efficiency gains, a really compelling narrative on both fronts. Asana is making steady progress, which is commendable, but maybe it hasn't hit that perfect combination yet that triggers a major re-rating of the stock. It's good, but perhaps not perceived as great enough yet.
That makes a lot of sense. The market's demanding a lot right now. But okay, underlying that stock reaction, what about the actual business? Are the key metrics showing improvement? What's driving those EPS beats fundamentally?
Oh, absolutely. Fundamentally, the trends are positive. You definitely see sequential revenue growth each quarter. That means they're expanding, adding customers, or getting more from existing ones. And importantly, operating margins have been gradually improving. That shows better cost control, more efficiency as they scale. Plus, net losses have been shrinking. So there's clear progress towards break-even, maybe even slight profitability on a consistent basis. These are solid signs. It shows discipline. It shows the business is getting healthier. Even if the stock market isn't throwing a party every time they report a beat, the foundation seems to be strengthening.
Okay, good foundation. Now, stepping away from the pure numbers for a moment, were there any big company-specific events this past quarter, like major product news, leadership shuffles, or shifts in the wider sauce world that might be playing a role here?
It was actually a relatively quiet quarter on that front. No huge, splashy product launches or major changes in the executive suite reported that really shake things up. What they have been doing is continuing to enhance their platform, particularly around AI features for workflow analytics and better integrations with those big enterprise productivity tools. That kind of continuous improvement, especially adding AI smarts, is pretty crucial right now to stay competitive. It's maybe less headline grabbing, but it's important work for a platform like theirs.
Right, steady evolution rather than revolution. Is that seen as a positive, like focusing on execution, or could it be a negative, like they're not generating enough excitement in a really competitive space?
It's probably a bit of both, honestly. On one hand, investors do want to see solid execution and a clear path to profit, so that steady enhancement is good. It shows focus. But on the other hand, yeah, in a crowded market like project management software, sometimes you need those wow moments to really capture attention and change the narrative. Kind of highlights that shift in the market. It's not just about growth anymore. It's about efficient growth, improving your strategic value. Asana seems to be focusing on that through these quieter incremental gains.
Efficient growth. Okay. That ties into the broader picture. What is the bigger picture right now for SaaS companies and the general economy? How might that be influencing Asana and how investors see them?
Well, stepping back, the whole SaaS sector is still feeling some pressure from cautious IT spending by businesses. Budgets are definitely still tight. Even though the overall macro environment feels relatively stable, companies are really scrutinizing spending. Decision cycles, especially for bigger software deals, are longer. Things just take more time to get approved. And for investors looking at SaaS, the focus is laser sharp on margin expansion and seeing a clear path to generating actual cash flow. That's a huge driver of valuations right now, which, to Asana's credit, is exactly what they seem to be working on given those improving margins we talked about.
Okay, so a cautious environment overall. How are the professional analysts reacting to Asana within that context? Have we seen any major shifts in ratings or price targets lately?
Analyst sentiment seems pretty stable, actually. No big waves of upgrades or downgrades in recent weeks leading up to this report. Price target adjustments have been pretty modest too, mostly leaning neutral to maybe slightly positive. It feels like analysts are acknowledging the company's progress on profitability and the stability that comes from their recurring revenue model. So they see the improvements, they see the stability, but maybe they're also factoring in those broader sector headwinds. It's like a cautious nod rather than a strong buy signal across the board.
Got it. Okay, let's switch gears to the market signals. What are the charts telling us? And what's the options market pricing in? For you, our listener, what's the technical picture for Asana look like heading into earnings?
Looking at the technicals, Asana stock has been pretty much range-bound lately, stuck in a bit of a channel. It has been underperforming the broader SaaS index, which itself hasn't been setting the world on fire. But importantly, it has managed to hold support near its 200-day moving average. That suggests some consolidation is happening. Buyers and sellers are kind of finding an equilibrium before the news drops. It feels like it's coiling for a move.
Coiling for a move. Okay, so what about the options market? Are traders betting on which way it will spring? More calls being bought, suggesting optimism, or more puts for pessimism? Or is it just a bet on volatility itself?
It's interesting. If you look at the open interest, the ratio of calls to puts is slightly favoring calls. So that suggests a bit of speculative optimism. Some traders are positioning for an upward move, but, and this is important, it's not an extreme skew. It's not like everyone is piling into calls expecting a massive surge. It feels more like Hopeful positioning, maybe aligning with that quiet optimism or whisper number we mentioned. Moderate optimism, not euphoria.
Okay, moderate optimism. And how big of a move are those options traders actually bracing for? What's the implied volatility telling us about the expected price swing during earnings week?
Right. The implied volatility is suggesting the market is pricing in a potential move of around plus or minus 10% to 12% for Asana in the week of the earnings report. Now, that's actually slightly above the average for many other companies in the sector. It indicates the market expects heightened volatility specifically for Asana around this release. So even though the stock's been quiet, the options market is definitely anticipating a significant breakout from this range one way or the other once those numbers are out.
A 10–12% implied move? Okay, that's significant. So bringing everything together, the history, the metrics, the market mood, what's a really positive bullish outcome look like here? What would actually impress the market?
A truly bullish scenario would need more than just a small beat. It would probably require a strong beat on both revenue and EPS, exceeding consensus by a decent margin. But even more critical would be the Q3 guidance. If that comes in significantly ahead of current expectations, that would be huge. Other catalysts: faster improvement in operating margins, maybe even hitting GAAP profitability or a clear line of sight to it, strong proof of picking up more large enterprise customers, and seeing that net dollar retention number stay strong or even tick up, basically showing acceleration in both growth and efficiency.
Okay, that's the bull case. What about the flip side? What are the key risks? What could trigger a bearish reaction, maybe even send the stock below that 200-day average it's been holding?
The biggest risks. Missing on revenue would be bad, but arguably worse would be light guidance for Q3. That forward look is so critical. Any commentary from management suggesting that the macro headwinds are getting worse for them specifically, or signs that billings growth is slowing down, or, God forbid, customers are leaving or shrinking their spend, those would be major red flags. Also, any backsliding on margins. If costs start rising unexpectedly or they lose operating leverage, that would hit investor confidence hard, given the focus on profitability. Anything that casts doubt on that path to sustainable profit would be punished.
So many moving parts. For you, our listener, trying to cut through the noise when that report comes out, what's the absolute most important thing to focus on? If you could only watch one metric, what should it be?
Yeah, it's easy to get lost in the weeds. For Asana, right now, I'd say it really boils down to the forward revenue guidance for Q3. That single piece of data will likely be the clearest signal about their momentum, about demand strength, especially from those crucial large enterprise clients. A strong outlook for Q3 could definitely overshadow even a slightly softer Q2 result. Conversely, weak guidance could sink the stock, even if Q2 numbers looked okay. The market is intensely focused on what's next.
Forward guidance. Got it. Okay, so let's try and synthesize all of this. What's our overall take, our leaning heading into Asana's report, and maybe some potential approaches for you, the listener, to consider?
Well, putting it all together, our overall leaning is probably neutral, but maybe with a slight bullish tilt. You have that consistent history of beats. You have clear fundamental progress on margins and towards profitability. That's the positive. But you also have that history of limited price follow-through after earnings, and no obvious major new catalyst has really emerged recently, plus the broader size caution. So it leads us to a pretty moderate confidence score, let's say around a 5.5 out of 10. The market seems to acknowledge the good, but isn't quite ready to reward it aggressively yet. Now, for strategy considerations, it really depends on your risk tolerance, right? If you're more risk-averse, waiting until after the report seems prudent. Get clarity on that Q3 guidance. Listen to the management call. Then maybe look to enter on a significant dip if the market overreacts negatively to decent news, or perhaps on a confirmed breakout if the guidance is genuinely strong. If you're comfortable with options and the higher risk, that 10–12% implied move is tempting.
A straddle or strangle could play that volatility, aiming to profit from a big move regardless of direction, given the history of pops and drops, but maybe not sustained trends right away. And if you already hold the stock, given the potential volatility and the lack of a strong recent uptrend, maybe considering some protective puts to hedge the position through earnings isn't a bad idea, especially with the broader macro uncertainty still lingering. It's about managing that potential downside.
That's a really thorough breakdown. It certainly shows there's a lot more to analyzing an earnings report than just looking at the headline EPS beat or miss. You really have to consider the history, the guidance, the sentiment, the whole context. And as we wrap up, here's something for you to think about. We're seeing this pattern across various companies, beating estimates but getting a lukewarm stock reaction. Does this mean the market is just fundamentally cautious right now, maybe still scarred by past valuations? Or has the bar simply been raised where merely good is now just expected, and you need something truly exceptional to spark a real rally? Something to ponder as you watch Asana's results come in. Thanks for joining us on Investing Talk Podcast. We'll be back soon with another discussion.